Morningstar, I'm Christian Charret. Exchange-traded funds in Canada saw nearly $16 billion in net new inflows for the first 11 months of 2016, which is shaping up to be another record year for the ETF industry. I'm here today with Mr. Alain Desbiens. He is Vice President of Sales at BMO ETFs to talk about where all this new money has been going this past year. Alain, thank you very much for being with us today.
Hello, Christian.
So when we spoke last year, you described 2015 as a banner year, and 2016 is shaping up to be even better so far.
Or it's going to be the best year ever, or it's going to be the second best year ever. One thing for sure is March 2016 was the best month ever in the industry this year, with more than $3 billion of net sales. So we're still seeing the sales accelerating, and in some spot even faster than in 2015.
And these sales are looking pretty good as well versus the mutual fund industry.
Well, I think the industry is morphing pre-CRM2. So what we saw this year, which is a big thing on the ETF side, is when you amalgamate all the net sales of the mutual fund industry and the ETF industry, $1 in three went into the exchange-traded funds, which is a big increase versus 2015 and 2014. Though I have to say this year, the net sales of the mutual funds in total have been a bit lower, but mind you, 1/3 of the asset in terms of net sales this year went into the ETF, and that's a big change pre-CRM2.
So talking about the sales for this past year, let's talk about the major asset classes. What were the best sellers for the year?
Compared to 2015, more Canadian equities, more fixed income, a bit less US equity, that could change in 2017, and really less international sales. We had Brexit, didn't help. So this is, in terms of asset class, the big change. We're seeing also a tilt upward towards the smart beta and active if we combine both. So right now there's $8 billion, a bit more than $8 billion in smart beta and active in Canada. So we're seeing also the sales accelerating there.
Now, you've mentioned international equity didn't do as well as last year. What were some of the other asset classes that were among the bottom performers?
Well, there's not much fund wrap or, balance fund into the ETF. There's still, for $1 invested in balance or equity ETF portfolios within the ETF sleeve, $255 on the mutual fund side. So really, solution all-in-one, wraps, really the mutual fund industry still dominate that segment. Though what we see is an acceleration on the equity side, US and CAD. Right now in Canada, for each dollar is going into the ETF, there's $7 in the mutual fund, so we're seeing the sales accelerating in that one, and also on the fixed income side.
And let's talk about some specific funds. What were some of the best sellers?
This year, fixed income was increased 10%, so this is a big change. This year, ZAG, which is the replication of the BMO FTSE TMX, is the best seller. Last year, it was our ZEA, which was the replication of the MSCI International. Also, in terms of the best fund, what we see is the institutional. Institutional is really important on the ETF, are using more and more fixed income ETF, whichever it's the broad indices are part of the indices, whichever is the corporate, the provincial or the federal. What we saw also both on the retail and on the institutional side is the use of more exchange-traded funds with a smart beta tilt, whichever it was dividend or the low vol.
Have there been any surprises among the trends that you saw in the past year?
Not really, except that some of the trends are accelerating, and we think that's going to continue in 2017 on the fixed income side. This is really on both the retail and on the institutional side. ETF are becoming a solution for portfolio construction on both channel, institutional and retail.
Now, switching over to ETF providers, BMO was once again the top seller in Canada among all the ETF providers. Congratulations.
Thank you. It's a great accomplishment for us. It's 6 years in a row, so we're really happy with more than $33 billion, roughly 30% market share. What we saw also as a difference versus last year, Christian, last year there was 12 ETF providers. This year we're 18. The thing that doesn't change, though, the big four, what I would call in terms of net sales, BMO, iShares, Vanguard, Horizon, basically have a concentration of 87% of all sales, the same than last year. They basically have more than 91% of the AUM, same than last year. So far, the introduction of new ETF providers has not shown and translated into increased net sales for that group so far, and in terms of AUM. So we're going to see in 2017 with probably one or two new ETF providers, if that trend is going to change. One thing for sure, in 2010, I remember when I joined the industry, there was 125 ETF. There was $38 billion. Now we've got more than 460, coming on 500 soon, more than 18 providers. So we're going to see probably still in 2016-17 an acceleration of the numbers of providers and the numbers of product. Maybe 550 ETF at the end of 2017 in Canada. Little prediction.
So we'll have lots to talk about in the upcoming year. Alain, thank you very much for being with us today.
Thank you, Christian.
For Morningstar, I'm Christian Charret. Thank you very much for watching.